Good afternoon, everybody. Scott G with the Simple Trading Life here with our Friday edition of our YouTube live stream. So welcome to everyone who is joining us. I'm actually getting started just a couple minutes early. Let me bring up the comments so I can see everyone. There we go. I have the comments on my phone. So anybody who ends up joining, feel free to leave a comment, ask a question, and we'll make sure we do our best to answer all the questions that get asked. So on my screen here, you can see I have ES as we wait for some folks to join. And ES is currently ramping, as you can see. So we will be talking about that shortly. Just waiting for a few people to join us. All right. Give me 1 second here, folks. There we go. And I just had an alert go off, so I need to see what that was. And that was just an alert letting me know that SPY was also climbing, which obviously makes perfect sense, right? So let me go down here. We'll bring up SPY. See what SPY's doing. Okay, you see SPY had that same type of ramp. SPY was holding the 20 here on the 30-minute chart. And we have this continuation hammer right here. We call it a momentum hammer, which also happened to be an inside candle. Okay, that means that we weren't able to break out of the range of the preceding candle. And then we got this nice spike once we took the top of that out. Hey, Stockafella, good to see you. Good to see you. Glad you could join. Just waiting for a few more people to get in here. Folks, when you join, make sure you say hello in the comments. Let me know that you're here. I'd like to say hi to the folks that join, and if you're brand new, welcome. Give us a thumbs up. Subscribe to the channel and make sure you turn on the notifications bell. That'll help you be alerted every time that we go live or upload a new video. So right now we are currently looking at SPY, which is obviously mirroring what ES is doing. The folks in our premium room, I alerted them to a nice little scalp trade on SPY earlier today. Let me come back over here, get back to ES. See, we have a couple more folks joining us right now, so hello. So over here on ES, you're gonna see it looks almost identical to SPY. We've been holding the 20 here pretty much all day. Okay, obviously spiking down below, but all the candle closes above the 20. And we have that same exact pattern right there. We had an inside hammer. Once we took the top of that out, price really shot to the upside. So we kind of expected that just based on some of the stuff that we teach and some of the setups that we look for. So going back to the morning, let's look how the morning started. we'll go ahead and get going. I know a few more people will be joining us as we go along. So coming into regular trading hours, which is this candle right here, we had an inside candle. And now typically, here's what you got to be aware of. The opening candle for regular trading hours for ES, for the market, is sort of like its own animal, right? So some of the normal stuff that we trade throughout the day or maybe even the overnight session, you have to be a little bit careful about trying to trade that on the opening candle. Now, I know going into the day, there was a lot of people on Twitter based on this move right through here that thought we were really just going to take off. And we got this initial spike up. You can see that right here. Got this initial spike up, and then we flushed down right to the 200. Right to the 200 is where we caught support. Then we tried to push back up. These two candles here, this was a big green candle at one time. And then sellers came back in, pushed it down, tried to drive through both of these moving averages, the blue being the 20 simple moving average, the green being the 200 simple moving average. And we also had support here at 2783.75. So we had three things right here that were acting as support. So price pushed its way down through, then popped back up, then it tried to push down again, and then at that point the sellers seemed to run out of steam and the buyers took control, and we've steadily been climbing since about 11:30 in the morning. Had this pop here. Okay, then we kind of eased up for a little bit. This was a red candle at one time, came back, formed this inside hammer, and then like I said, once we got above here, it was smooth sailing. We popped to the upside, and if we can hold up here, we'll look at a higher time frame here in just a second. If we can hold up here, we can potentially go even higher. So let's go ahead and look at a higher time frame. Let's look at the 4-hour. And we're right here. Okay, so we got to get above this wick, and this is 2817.50. All right, so that would be our next obstacle to the top side, 2817.50. If we get above there, we have a level at 2822.25. We also have this wick over here. So those would be our obstacles to the upside. And we're currently at 2814, 2814.50. So right now, this is what we're looking for next, 2817.50. So if I go back to the 30-minute, I'll go ahead and put that in. Let's do it just like this. All right, 2817.50, and we really need to get above that. That is the top of that wick. So let's make this 2818. So if that goes off, we know that we're taking this wick out right here. Right here. Okay, so that is our next obstacle. For anybody who's new, why would I say that is an obstacle? All right, so whenever you have a big topping tail like this, or big bottoming tails, this is showing selling pressure. Okay, at one time, this was a green candle up here. And then sellers came in and pushed it back down, all the way back down to here. Okay, that tells us that in this area, at that time, there were sellers who found this to be a value area, right? So they wanted to drive price back down, and they were able to accomplish that. Okay, we have not been back above this level since then. Now this morning, what we did is we completed this slow curve pattern back up to here. Okay, we formed a little cup and handle, couldn't go higher. That's when we sold off. Now we're coming back around, and it looks like we're trying to put in a J-hook pattern. I talked about this in our room the other day. Anybody who doesn't know what a J-hook pattern is, it's just what it sounds like. It looks just like a J. So you see how we came down here, right? Came down here, we curled around, and now we're moving back to the top side. Okay, so I would anticipate if we're able to take this out right here, we're going to at least make it to the 28, 22, 25 level. That's if we take this wick out. and potentially higher, right? Potentially higher. Okay, we could go to the top of this candle. We could go up here to this resistance level at 28.30.50. So as you can see, right as we're talking here, price is trying to go higher. So we'll watch this just for a minute or two. We'll see if we spike up there. And if we do, if we're able to take the top of that wick out. Now, I use terminology like we need to clear and hold. So that means we need to clear this wick and then hold. Sometimes we'll poke our head above and then we'll come back and then the candle will end up closing something like this right here. Pokes its head above, okay, then it comes back. Okay, so it cleared but it didn't hold. So you got to clear and hold an obstacle like this. Then once you do that, if you get up into the stops that would be placed right above here, it should pop price right up to this level, the 28.22.25 level. And if we get through there, we're looking at the top of these candles right here, so on and so forth, and we keep working our way up until something stops us. All right, got a couple more people. So welcome to everybody. If anybody's new, we're glad to have you. You may be wondering what this purple dashed line is. That is opening price level. So we always put that on our charts. For the futures, I do it twice a day. So we do it once for the overnight session open at 6 p.m. Eastern time. Then we do it again. We remove that and we put on the RTH or regular trading hours session at 9:30. So that is what this line is right here. So anybody who's new, they may be wondering, what is that purple dashed line? That's what it's there for. That just shows us where opening price level was. Okay, I want to take a look at a few other things, and we'll go ahead and do that. We have our alert set here. I'll set another one. Let me do this. I'm going to bring this one up since we're not using it. Let's put it right below this candle. Okay. We always use alerts. That way we can go look at other things. If the alerts go off, we'll come back to the market, kind of see what's happening. But obviously, again, showing a lot of strength this afternoon. Since about 11:30 this morning, I've had nothing but green candles to the upside. I both watch and trade off of the 30-minute primarily. But when we're going to take trades in other names, we have a process we go through. We call it the bigger picture. And we're looking at the monthly, the weekly, the daily, and then whatever we're trading. So we may be able to go through that here in a little bit. All right. So one of the names, and there's been a couple of them, surprise names today, Tilray and CGC have both shown some strength. So here's Tilray. When I say it's shown some strength, look at this. Look at this to the upside. So these are both weed stocks or marijuana stocks. And here recently, they appear to be sort of coming back to life. They've had some decent news in the, let's call it recent past. They've had some decent news. I know there was news out of Canada that was positive for the weed stocks and a couple other things. But anyway, this is really a surprise because if we go back, first of all, let me turn off the gray areas you see are the after hours trading. I typically turn those off during the day. All right, so let's go back and you can see over the past, let's see how many days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, you can kind of see how we were trading. Okay, working our way up. I'll just draw these in, it'll make it easier for you. Okay, we were kind of in a contracting range. Let me show you. Okay, it doesn't have to be exact. You can see that the range was getting smaller and smaller. Now, what does that signify? That tells us that energy is building up, right? And that at some point, it's going to break sharply one direction or the other out of the range. Well, obviously, we can see which direction that it broke, right? It broke to the upside. Several more people just joined us, so welcome. broke to the upside. So if I squeeze it back in here, once we broke here, here was our sharp break. We came back, we retested, and we went higher. Those of you who are either in my room in the simpletradinglife.com community or who frequent these live streams, you know this is one of my favorite patterns, the break, retest, and go. So whenever you break a key level, or sometimes it may be a key moving average, support or resistance level, a trend line that's been holding for a while, whenever you break it, typically what happens is soon after, price comes back and retests where it broke, right? Now sometimes we'll drop right back in. Okay, we've seen that happen the other day. I can't even remember exactly which name it was on off the top of my head, but we had broke out of a range, then we dropped back into the range. Okay, about a day later actually. But here we break, we retest, and we go. All right, the retest is typically some people taking some profits, then they gather strength right here. So in this case, it's the buyers, and we push to the top side. Hey, Cathal. Cathal is one of our members in our simpletradinglife.com premium community. So then we had this nice strong push up. And as you can see, it's been as high as $8. Let's see where it opened up today. Opened at $6.86. So again, this is Tilray. Tilray is a name that I used to trade, and then it had a total collapse, and I actually took it off of my watch list. Now, if it starts to regain some strength, maybe gets back up around $10 or more, I might add it back on. This and CGC, let's go look at CGC. These are names I do like to trade. Okay, so CGC, you're going to see has the same strength to the upside. See this? Just like Tilray did. The reason I like to trade these, if you're new to this live stream, is because it's a high beta stock. Okay, and high beta means small moves pay significantly. And I was showing the folks in my room this, I think it was yesterday, how just little like 30, 20, 30, 40 cent moves on CGC pays very, very well. Very well. I think it was CGC I was using as an example, and I think it was yesterday. And it was a very small move. It was either 20 or 30 cents. And if somebody would have played that move, they could have played it with options. The options premiums were extremely cheap. That's another reason that I like it, especially for people who might have smaller accounts. That little move returned 37.5% on your money. So if you had $100 in the play, I'm just using a small round number, you would have made $37.50 in profit. If you had $1,000, you would have made $375 in profit. And it was a very quick move. It was a very small move, and it wouldn't have cost you very much. So that's one of the reasons I like these names. And like I said, I may add Tilray back to my list if it gets back up around $10 or so. Okay, so currently it's not on my list. I took it off. But if it starts to get back up in that range, then I might add it back in. All right, let's look at Netflix. And we'll go back to the market if we have any alerts go off. I went past it. Let me look. Here we go. So Netflix. This was one off of our watch list this morning. I put a watch list out to my premium community every day. They know the reasons why each name is on the watch list. The premium community members do. I'll post the list on Twitter, Facebook, in our free room, but I don't tell everybody the exact reasons why they're on there because that wouldn't be fair to our premium members. But they know why each name is on there. So today, Netflix was on our list. Yes, Stockefellow, I'll look at LMT here very shortly. I'll do that for you. So the reason Netflix was on our list, again, I'm not going to give the reason, but it was, and we were looking for a downside move early in the day. And from where it triggered, which was right here, this red line, down to here was a $3.30 move. $3.30 move. So for somebody who's looking for a nice scalp early in the day, right there it was, high probability play, and you make your money, you get out. You know, like I said in our room, even if you catch $2.50 or $3 of that move, you're going to make some nice profit, and it happened quickly, and you can get out. Now, there may be a reason you want to try to go long. Okay, for us, there wasn't anything immediately, but somebody else, you maybe go to a lower time frame. Let's look. There might have been something. Let's look at a 15. Yeah, maybe somebody could have went long right here, okay, on a 15-minute, and then rode it back up to the 20. That would have also been a nice move. Let's look here. Let's just say 422 to 427. So about a $5 move, right? Okay, from the top of this. Okay, if somebody thought this was a good reversal signal on the drop, they could enter above here. Then you have to have profit targets, right? So for us, we look at wicks, we look at support and resistance levels, we look at moving averages. So maybe somebody wanted to take it back up to the 20. Obviously, it went right to the 20, and then it sold back down. Back to the 20, and it sold back down. Back to the 20, sold back down. Okay, so the 20 has been offering resistance for Netflix today. But the reason it was on our watch list this morning, we had a trigger where this red line is. Now, again, you guys aren't going to know what the trigger is or was, but there was a trigger there for us that told us it was a high probability play. It moved $3.30 before it then came back. So that was one. Netflix. Let's go to LMT for my buddy Stockafella. Here we go, Lockheed. All right, so this is not a name that I normally trade, so I'm going to go ahead and draw my levels in. Anybody who's new, you're going to see how this works. It's so simple. You go to a 4-hour time frame. You change from candles to a line chart. Then you come over here to your tools, and you want to get a price level tool. So that would be this tool right here on Thinkorswim. And I use Thinkorswim just for charting and analysis. I trade on other platforms. I'm not going to get into that right now, but I was with Thinkorswim for years and years and years. They just had so many issues. I decided to do my trading somewhere else. I still use their charts and their analysis tools. So then you start at current price and you work to the left, and we're looking for sharp pivots, or we're looking for bigger moves. But I always mark the first move in. Now, if you want to be exact, you don't have to be exact, but if you want to be exact, just hover over this, and it's going to tell you exactly where you need to mark it. 377.01. All right, so if you're just a few pennies off, I wouldn't even worry about it, but then you can come in here and make it exact. Okay, Stockfella says he's looking at it for next week. Okay, so then we just start working our way back. So this would definitely be a big move and a sharp pivot, right? Okay, so 401.51. Right there. Okay, we've already got this one marked. This is what we would consider a small move. Nope, but we would mark this. 366.25. 366.25. I'm going to have to adjust. So you can make these exact if you want. But if they're ever within a few pennies, I just leave them myself. Okay, you don't have to be exact. I would ignore this one, but I would mark this one in. All right, so we have 354.75. See how close we can get. 354.78. For me, that's good enough. 3 pennies. Okay, we'll ignore this one. We'll mark this one in right here. 331.87. I'll go ahead and just make sure that one is exact. All right, it's probably enough to the downside. Let's see if we can get anything to the upside here. Sure we can. So right here would be another one. 427.78. 427.78. I couldn't get close enough, so I'll go in and make it exact. See how simple this is? And let's just go right up here, okay, because we sort of have you know, a double or triple top right up here. So I'm going to mark this one because it's the most recent. In fact, give me a second. I'm actually going to mark this one right here, 437.40. 437.40. I will have to adjust it. Again, if it's within 2-3 cents, just leave it. If not, you can go in and make it exact. All right, so this is good enough. Then you switch back to candles. Okay, then you go back to the time frame that you trade. For me, that's the 30-minute. Now you have your levels drawn in. All right, now you have your levels drawn in. Okay, so now, once you're back on your time frame, what you want to know is you kind of want to know the average ATR, the average true range. Okay, that's the range that a name moves each day. Now there's a really easy way to sort of like cheat or a hack, right? You can just do this. Just take about 2, 3, 4 days. Take the low, 373, the high, 383. So that's about $10. Go to the next day. Okay, 376, you don't have to be exact here. 376, $8. So we had 10 and then we had 8. Let's look at this day. All right, 375, go to the high of that day, 384, so that's about $9. Now let's take this day. This will be the last one we do for now. 370 to 392. Okay, so this one was like $22. Right? Or wait, was it more than that? 370. I was eyeballing it here. Yeah, about $22. So then you just take those four numbers, 10, 8, 9, 22, add them together, divide by 4. That'll give you pretty close to an average true range. So why is that important? Let me do it real quick. Show you guys just what I would do if it was me. 9, 10, 8, divide by 4. Okay, about $12 approximately. Okay, the reason that's important is you see from this level to this level, how far is that? Okay, that is 23, about $24.50. Well, if the stock only moves on average about $12 a day, we might want to have another level or two in between here. Okay, does that make sense? So then on the level that you trade, you can look and see, is there anywhere that makes sense that I put another level in? Okay, now I definitely can see one, right? It'd be right through here. And again, you don't have to be exact. Okay, right through there. You see that? See how it's been tested, 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 tested. All right, so I throw that in there. And then I can even come up here. Is there anything up here? Just take your level. Nothing. No, nothing that I think warrants another level. And really, we're sort of in that $12 to $13 range anyway. So is it possible for it to move that range? Absolutely. Okay. So now we look at the bigger picture. And what is the bigger picture? So we're going to go through this together. Give me 1 second here. Stockfella says he just hit that level a few minutes ago. Okay, so bigger picture. We want to look at the monthly. Always start with the monthly. Now we're almost to the end of a month, and that's good because we have a lot of data. So we're green on the month. See this? Okay, and we're following somewhat of a hammer. I don't really like that big wick on the top there. And as you can see, we weren't able to take it out. You see this? Okay, we got up to it and then we kind of pulled back a little bit, but we're still very green on the month. Very green on the month. Okay, then we go to the weekly. Let's see what we're doing on the weekly. And this is the end of the week, so we have very good data. We're inside, okay, inside and red on the week. So we're pretty big green on the month, but we're inside in red on the week. This was the previous week. When I say we're inside, we have not taken out either side of the previous week's range. We came up close up here, and we've been down close down here, but we weren't able to take out either side. So this currently, we would say that it is currently an inside candle. It has not closed as an inside candle. That's important. All right. And then we go to the daily. Okay, now we're late enough in the day that we can kind of use today's candle. So today's candle is green. Yesterday was red. Today's candle's green. Let's get just a little bit closer. Okay, looks like we're forming somewhat of a hammer-like thing. This is not really a great hammer. I like to see a wick that's about 3 to 3.5 times size the body. Okay, that's fine for the body, but I'd like to see the wick maybe be down to about here. Maybe even bouncing off of this 20 or this support level. Okay, but this is still positive. So we're green on the monthly. We're red and currently inside on the weekly, and we're green with some positive momentum to the upside on the daily. Now, what else can we see here on the daily? We went inside here, okay, inside of this. This one got just outside. I'm going to verify that. Yes, this one got just outside of this one, but it couldn't hold. Okay, you see here, see 384.44? Right now, that's acting as some pretty strong resistance. We've even been up to it here, up to it here, up to it here. And here we broke through, but we closed below it. So right now, this is a very important level. All right, now we go back to the time frame that we trade. Give me 1 second here. All right, now you see, here's the last few days, and you see how many times we've been up to test. We just saw it on the daily, right? Several times we've been up here to test this area. Here, and then here again. All right, now we're still green on the day. We're still green on the day, okay, moving up. So what would be important? Stockfella, I think you said you're looking for 402 as resistance. All right, so if we just squeeze this in, okay, we know 401.51 is exactly the level, because I made them exact, or maybe this was the one that could have been 3 pennies off. But right up here would be some resistance. So what is crucial if he wants to go long? He needs to break and hold this level, 384.44. He needs price, doesn't have to be today, right? Because I think he said he's looking into next week. Next week. So he's looking into next week. He just needs to get a break and hold of this level, 384.44. Then we look to the left. What are the potential obstacles? All right, here's your first one, this wick. Here's your second one. This one would be bigger, this big wick here. When you have a big topping tail, that shows that there was a lot of selling pressure right there. Okay, so he would have to get over here. That one might not be as hard, okay, but the reason I still point this out, look what happened after. Okay, see this? All right, so right here, let's look at the top. It is 392.54. 392.54. So he might want to put an alert at, say, 392.58. 2, 3, 4, 5 pennies above this. And if that alert goes off, then he knows he's breaking above here. Now, once he gets above here, it probably would be fairly smooth sailing to get up to this level at 401.51. Okay, little wick. That's small to medium. Okay, could that cause some resistance? It could, but I think once you broke through here, excuse me, you're going to have a fairly easy time to get up here, if that makes sense. All right, so hopefully that helps you out, stock fella. Also, something that may play in your favor, it does look like we're sort of putting in a little bit of a slow curve. If we get back up above here, okay, it would make sense then that price would want to complete the pattern and get all the way back up here. We've seen it 2 days in a row on ES. I'll go back and show you what I'm talking about on ES. Whenever price starts to come down and then bottom out like this, it doesn't matter if you get a little bit of chop like this, all right? So you almost could draw a line across there. Okay, we got a bottom, and we come back up. Price usually wants to get back up there and kind of complete that pattern. Then when it gets up here, and I'm going to show you this on ES, what happens most of the time, frequently, is it pulls back when it first gets there. And I'm going to show you on ES, but let me just kind of show you here. So if it gets back up here, typically what happens is you're going to get one of two things. You're either going to get a strong sell off, or you're going to get what is known as a cup and handle, right? It'll kind of come down, it'll round, and then it'll go back up, and it'll look like a handle on a cup. That's why they call it a cup and handle, right? All right, so let me show you on ES. Let me show you on ES. So let's get back over here to the market. All right, so here we just had one today. Right here is your cup. Comes back up to here, completes here, and what did it do? It sold away immediately, pulled back immediately. You could draw a little thing there, and there's your handle, right? So here's your cup right here. Whoops, right here, and then here's your handle. Now, sometimes once you form the handle, it'll keep going higher. Okay, in this case it didn't. Then it sold away back down to the 20, and now we're putting in that J hook pattern. See the J here? Okay, you see that? Looks just like a J. Okay, that's another frequent pattern. Now, to show you how this plays out, let's see here. I think it was right here. Yep, right here. Okay, so we had it the day before. Here's your slow curve up here. Here's your pullback, making your handle, your cup and handle. So when it got up here to complete the slow curve, right there, then we anticipate, and we almost always get it. Okay, you can never say 100% of the time, but almost always you're going to get a pullback. Sometimes it can be violent. It can come all the way back down here. But in a lot of cases, it comes down, it rounds off, it comes back up. Here's your handle. And again, just like I just showed you, it didn't go higher here. But then what did we do? We put in a J hook. You see this? There's your J right there. Right there's your J. So we went cup and handle right into a J hook pattern. You're welcome, stock fella. You're welcome. I'm glad you could join us today. All right. So now we come back over here and we have the same thing. We have the same exact thing. Here's our cup. Here's our handle. It couldn't go higher. And right now we're putting in the J hook pattern. So you guys got to get used to looking at these kind of things, seeing them, right? You can draw them in. So like for my premium members, I'll draw them in a lot. Okay, I'll snapshot this and I'll draw in the cup, I'll draw in the handle, or I'll draw in a J hook or whatever I'm trying to show them at the time. Once you've looked at enough charts, and trust me, if you guys don't know me, if this is your first time here, like literally I look at charts all day and all night long. And so after a while, your eyes just start to pick this stuff up. Your eyes will pick it up. You won't have to draw anything in. You're going to see this. And when it's about right over here, you're already saying to yourself, and usually I'm alerting the room, looks like we're forming a slow curve. Okay, so I always call it a slow curve until it completes, because sometimes it'll go on through. Okay, but a lot of the times, most of the time, it's going to get back up here. then it's going to form either a handle or a strong pullback. And then the handle can go higher itself, or it rejects, and then we got this J hook here. All right. Now a J hook, I want to show you. Frequently, not every time, frequently a J hook will be formed because of support by something like the 20 simple moving average. So price moved away. See this? Here's where the 20 was. See how it moved away? Then it wants to come back. It can't get too far away without wanting to come back. Then when it comes back, if it holds, which it has here, then it forms the J and heads back up. That's if you're, if buyers are showing strength. Okay, so we are taking out this wick right now. That's what that alert was. You might have seen it over here on my screen. We're taking out this wick. So let's look. We'll stay here for a minute or so. We'll see if we get a nice pop. Those of you who just joined us, I see a couple people, because I know at least one person had to leave, and it shows that a couple more people were here. So glad you're here. Definitely give us thumbs up and subscribe to the channel. Make sure you turn on the notifications bell. All right, and here we go. We're getting the pop. Let's see if we can shoot up to that 28, 22, 25 level fairly quickly. All right, so right here's what we're watching. We just broke through this right here, this wick. Okay, see it going? See it popping up? We're already at 28.21. 28.21.75 has been our high already. Let's see if we can get just a little bit more push. See if we can tag this level. We'll stay here. Those of you who may be new, you may be wondering, okay, how did he know it was going to pop once it got above here? All right. So whenever you see medium to bigger size topping tails or bottoming tails, you got to think about this, right? At one time, this was a green candle. Sellers came in and they pushed the price back down. Okay, we talked about that a little bit ago. Well, when they enter, what does a good trader do? A good trader is going to put a stop, right? They don't want price to go against them. So they're going to put their stops just above here. Just above here. Now, we don't know exactly where they're going to put them. Okay, but we know that their stops are going to be just above here somewhere. So once you break that level, okay, which would have been right there, okay, see across, if you look across from my cursor, once you break that level, if you get into the stops, it causes price to pop, okay, because it's forcing them to have to sell, right? They have to protect, they have to cover. And price pops up. That's what caused that pop up this direction. Now we know, okay, we teach price action in our room. We know that there's certain formations, previous price formations that can occur, that if price reverses and starts to go the other way, we can almost predict. And I hate the word predict. I hate the word guess. Let's say forecast or know that it's highly probable that we're going to see a steep, incline or a big green candle, or if it's the other way, a big red candle based on previous price action that forms a certain way. Price action trading is not as difficult as what you may think. In fact, it's probably the easiest. That's why I teach it. It's probably the easiest to learn. Now, it's not, there's a lot to it. Okay, some people think that price action, it's really basic, it's really simple. There's some truth to that, okay? That's why we primarily trade price action. But there are a lot of nuances to it. So the folks in my premium room, they understand that. We've been really getting deep in it lately, so it can bring their knowledge level up, and they can start looking for the things that are going to happen, and they can be ready and anticipate the highly probable trades, and they'll know where the trigger points are. They can get in, and then they can get back out and collect their profits, lock their profits in. Okay, so far we got almost up to this level. All right, we knew it would be pretty easy to get up right around here. So now what we're going to see, let me see here. We're still not back down into the wick. Okay, so we may just, right now, we may just be getting a little bit of a pause. If we can break through here, then we would be looking at the top of this candle. Okay, right up in here. Why? Okay, somebody might be asking, why would we be looking at the top of this candle? Well, what happened when price got there originally? Big drop. See that? At one time, this entire candle was one big red candle. And it caught some support down here, and buyers pushed it right back up to this level at 2807.75. You see that? That's where the candle closed. Then they even tried to push it higher before ultimately they pushed it down again. Buyers came in, tried to push it up, and then we had the sell-off. Okay, so that is why we would look at this if this breaks. Okay, you just think through it logically. It's all, trading is common sense. That's all it is. It's common sense. All right, well, if I break here, what's the next thing that I need to be concerned about? Okay, well, it would be this resistance level. All right, if I break here, what is the next thing I need to be concerned about? Okay, it'd be the top of this candle. Why? I just showed you why. Because the last time price was here, it dropped away. That told us that there was all kinds of sellers right there. All kinds of aggressive sellers. That's the only way you could have pushed price down that far. All right. So it's, I've said this before, I don't use this analogy a lot, but it is really true. It's almost like putting the pieces of a puzzle together. Okay, and if you can see how they fit, you can take a lot of highly probable trades, and then you can take your profit out. Now, I'm conservative. Some of the folks in my room, they try to go for a little bit more. I like to lock profits in. Here we are testing the level right now. You may see that as I'm talking. We're testing the level right now. Okay, but it's just like putting the pieces of a puzzle together. And if, you know, some people are really good at looking at puzzle pieces and going, yeah, that goes here and this goes here. You got your easy pieces, right? Like your corner pieces. Well, what would be a corner piece? Like a big wick, right? That's like that should just jump out at you. Yep, that goes right here, right? Now, some of the harder ones to see are some of the more littler nuances, and we get into that in our premium community. But there are enough big pieces that they're so easy to see, or there's patterns that develop over and over again. I just showed you this same exact pattern has happened twice 2 days in a row on ES. Right? It's just a frequent pattern that happens. It's not going to happen every single day, right? There's some coincidence that it's happened 2 days in a row, but it happens enough on any name that you should be able, like I said, once you start to see it about here, you should know what you're in. You should know, okay, I've got a slow curve developing. I know it wants to complete. I know it wants to get up near the top here. Okay, once it got up here, I also know once it completes that it frequently pulls back. Okay, and my pullback could be severe, or we may just put a handle in. All right, little things like that will help you to be able to take profitable trades. All right, so far we still haven't been able to make it through here. Let's put an alert right above here because I do want to look at some other things. Put an alert right above there. And if it goes off, we'll know we're breaking through the level. And I'll put one sort of about right here, because if this one goes off, we'll know that we're starting to pull back. We couldn't get through resistance. I was laughing today. I was talking to my wife. I use tons of alerts for everything, right? I'm alerting setups and triggers and levels that might get broke, or hey, you know, like if this level gets broke, you should be looking at this. So I have all kinds of alerts. I had 111 alerts set on my TOS, and this morning I told my wife, I'm like, only a few of those are actually still valid. So sometimes alerts will go off and I'll look at that and I'll go, what is that? That's from like 2 weeks ago. Well, I went in today and I just got rid of, you can bulk, I don't know if you guys know how to do it, but if you guys are Thinkorswim users and you happen to have a whole bunch of alerts starting to pile up, go here, go to Market Watch. Here's all your alerts. You see them? These are all your alerts. Then come right over here. See, it says cancel active alerts. Now I'm not going to do it because these are all ones I put in just today. Just today. But that's how you do it. I'll show you again in case you didn't know. You go to Market Watch. Click on there. There's all your alerts. And if you want to get rid of all of them, like it's the end of a day or it's the end of a week, they're no longer valid, you come over to this little thing right here and it'll say cancel active alerts. Just click on that and you can get rid of all of them. So little hack if you didn't know how to do it. I didn't know how to do it for the longest time, and I would have to go through, you know, I'd have 111 alerts and maybe 100 of them aren't valid anymore, and I'd have to like cancel them one by one before I knew that little trick. Okay. All right. So I wanted to look at some other things. So we're going to go to another one straight off of our watch list today. MEOS. Whoop. I think I did it wrong. Is it MOES? Let's see. Hang on. I'll look it up. Let me look it up real quick here, guys. I have to get it off. There we go. MISO. I said MEOS. MISO. All right. Obviously, these aren't names that we're trading a lot. Okay. Now, we, every day in the premium room and in my community, we, again, know that a lot of the people in our community are small account people. They're either new, they're struggling, they're brand new traders, or they're improving. They're getting better. Okay, so a lot of those people have smaller accounts. What's a smaller account? All relative. Okay, it's all relative. But we do something every day. Some of the names on our watch list are called small account growth builders or small account growth watch list. So this was one of the names that was on there. We have a certain set of criteria that we look for, or that I look for, and I put them on the list. And I do tell the premium members what that criteria is. They know what the criteria is. And then what we're looking for are quick pops early in the day. This isn't something we're going to trade all day. This is not something we're going to trade all day. So let me do this. Let me turn on the after hours and pre-market because this is important. Okay, so here's a name, and as you can see, look down here, that normally trades around $6. You know, $6.50, whatever. Then, all of a sudden, look at what happened last night and then today. All right, so obviously there was some sort of catalyst that came out. News event, earnings, new products, new drugs, past a clinical trial, maybe they're merging with somebody. There's all different kinds of things that can make this happen. All right, now we don't just look at anyone that pops up. Again, we have specific criteria. There's volume concerns. There's percent of how much it's rising. There's relative volume, not just the actual volume. So let me give you just a little bit, just so you don't ever get yourself in trouble. Even if you see something like this on a name that's like, say, less than $10, typically we're trying to keep it between 2 to 20 in there, 2 to 20, because we want it to be affordable. Just because you see this doesn't mean that it's something good to trade. What if what if this stock normally only trades 10,000 shares a day? Does that do you any good? No, right? Even if it has a lot of aftermarket activity, well, who are mostly these people? These are mostly big money traders, institutions, banks, hedge funds, people like that. There are some retail traders. If you have an account that allows you to trade after hours and pre-market, there's some retail traders in there, but this is mostly the big money players. All right. There's a lot of people, they say, I hear this all the time, or I'll see it on Twitter. All the good trades happen after hours when I can't get to them or when retail can't get to them. All right. Keep that in the back of your mind, because if this is a stock that only trades like, say, 10,000 shares a day, and it has this huge move, and then it gets over here, and then you want to try to jump into it, well, what if all the action was right here? And then it opens up and there's very little volume traded. You could get stuck, right? We would call that an illiquid stock. There's no liquidity. So you want something, that's part of our criteria. I look for some average daily volume because I want it to be at least at a certain point, knowing that even without a catalyst, it trades a pretty high volume, and that allows you to be able to get in and out of the stock very easily. Now, I'm not going to go into all the other criteria, but so here was our trigger. Our trigger was right here today, right here. All right, 1615, we'll say. I think it was actually 1605. Yeah, it was 1605 was our trigger. Look how high it went right off the bat, up to $20.57. So over $4.50 move right out of the gate. But here's what I really want you to look at. What happened after that? Nothing. Nothing. It sold back down, and then it just chopped basically the rest of the day. These small account growth names, we are not looking to trade them all day long. We are only looking for a pop right out of the gate. And if we don't get it, we're not interested. So we don't enter, like most days, I'm going to have 3 to 5 small account growth names on our watch list. Most days, only one of them pops. The other 3 or 4 actually sell off. You might say, well, why don't you take them short? Most of them there's a couple of reasons. Most of them you either can't go short, they're hard to borrow, is what that's called, okay? Or, trust me, you don't want to go short, right? You don't want to get caught on the wrong side of a trade in something that usually is like this, right? Okay, so it's just not worth it. It's just not worth it to try to go short. So we're just looking for these quick pops, but we know if our trigger never happens, and that, like I said, out of 3 to 4 to 5 that I put on a watch list every day, all the move happened right here. Okay, then the market opens up and it goes like this. It starts working its way down. Because big money's out of it by that point. But, like today on MISO, boom, big pop. We've had about one good pop every day out of those 3 to 5 names that I find. I use the same criteria every day, and I can usually find about 3 to 5. And usually 1, and if you're lucky, maybe 2 of them will pop. But these are quick plays. These are quick. All right? So those are in and outs. One other thing to remember about these kind of plays, okay, there's something called a circuit breaker. If the price starts to go up or down really fast, they'll halt it for about 5 minutes. It's called a circuit breaker. Okay, if it's the first circuit breaker and it's on its way up, typically you don't have anything to worry about. In fact, today, this one hit a circuit breaker, and I can't remember exactly where. I want to say it was around 17, maybe 1780. I'm guessing. It was around 17 something. Then, when it turned back on, it popped right up to like 19 something. Then it pulled back just a little bit. Then it popped up to this 2057, and then it started slowly working its way back until it got down here. And then the rest of the day, it basically did nothing. So again, that's why we're only playing the pop. We're only playing the pop. So I'll just show you some of the other names we had. One was PSTI. which this one can be one of those ones that'll give you those pops, all right? Again, here's our movement. Pre-market, it was all the way up here. Okay, but once it opened, it did nothing. See this? Did nothing. Got all this nice movement pre-market, okay, or after hours, but that's why our trigger's up here. Now, somebody might say, well, okay, it's going to take a little bit to get up here. Well, why aren't you triggering until right up here? Okay, we want to know that somebody else is still interested in this thing. Here's what happens to a lot of novice traders who try to trade these kind of names. I've seen it over and over and over again. They get in, okay, they see this and they have some other criteria and they think this is a good name, and so they get in right at market open. And maybe it even starts to go that way a little bit, and then it just absolutely dumps on them. And they can't get out fast enough. And they end up losing a bunch of money or everything, okay, whatever they had in the trade. That's what I don't want to happen. Now, the reason that happens, again, is because big money's already gone in that case. But if we open up here, we want to open under the pre-market high. We want to, okay, because it's going to show us, are people still interested in this name? And if they are, and it breaks here, it's going to pop. And sometimes it'll barely, get up above here, and then it'll pull back, and then, but if it breaks and starts to go, you usually get a nice pop. And we're not looking for the world. Okay, let's say it's a $2 to $4 stock. Well, we might only be looking for, 30 to 50 to 75 cents. Okay, because that's good money on that size stock. Okay, if it's say 4 to 6 or 4 to 8, then maybe we're looking for 50 cents to a dollar, or 50 cents, to $1.25. And then if it's more like a, a 10, 12, $15 stock, then maybe we're looking for a couple of bucks. But we're not looking for the world. Now, occasionally, and I only say this because it happens once in a while, I don't want people to get excited. Occasionally, you do get these that are, maybe a $10 or $12 name, and the thing rips to like 30 bucks. Okay, but that doesn't happen all that often. And you don't want to anticipate it. I tell the people in my premium room this all the time, you would much rather lock in profits on a sure thing than give it all back on a maybe. I've seen so many people, if we go back to MISO, because we know how it played out. In my room, I know several people probably watched this. So again, the initial pop was like maybe it was 1780, and it hit a circuit breaker. And it stalled it for like 5 minutes. Then it came on and it shot up to like 19 something. Then it pulled back a little bit. It pulled back, maybe down in here. I think it was back into the 16 somewhere. Then it shot back up. I told the folks in my room, okay, I'd be out already. If you make $2-3 on that initial pop, that's awesome. Lock that in and you can be done. Now, it went up and it was like a $4.50 pop before it was all said and done, but you don't know that. You don't know that in real time, right? So when it went up to like 19 and then it started working its way back all the way to 16, whatever it was, 16.50 or 16.80, that's $2.20, $2.50. Why would you be giving that up? Because you don't know. It could just keep on going down and then you give it all back. Either scale out, so I don't know how many shares you would buy, right? Maybe you had 100 shares, maybe you had 50 shares, maybe you had whatever. Okay, whatever you had, maybe you scale out. So maybe on that first pop, you sell half or 3/4. Okay, and then you keep some, and then you see, okay, and you're going to have a stop. Maybe your stop is just above where you entered. It should never be, once it pops like that, you better be moving your stop into profitability. If you're not doing that, you're making a mistake. Okay, and then that would be your hard stop. Okay, so maybe up here you sell half of it or 3/4 of it or 2/3 of it. And then if it comes all the way back and hits your stop, okay, you profited. You made decent money. But then you're also protected and you have a little bit of a runner. And in this case, once it pops up here, then you make that. And then if you see it starting to ease back again, then sell the rest. All right, that's how these type of plays work. You are not married to these plays at all. These are not all-day plays. These are first 5 minutes, 10 minutes, 15 minutes. Rarely are you going to be in it more than 15, 20 minutes. Rarely. There are some cases where it'll come back down and then maybe later in the day it'll pop, but we're typically on to much safer, higher probability things at that point. All right, let's go back and look at the market. I haven't had any alerts go off, so I think we're still just sort of stalled out. Let's just see here. Yep. See? Because we have our alert here. It's almost there. And we had our alert up here. There we go. Just went off. Perfect timing, right? Okay, so you see this? We poked our head above, just barely. I can tell you exactly. 28.23. So we went 75 cents above that after we initially couldn't get there. Remember, we pulled back, then we went up, and then we got there, then we pulled back, then we poked our head above. Now it's come back, and now it's easing its way back down. We're into power hour. All right. Are we concerned about a sell-off? I'm trying to look here. I would start getting concerned if we got below here. If we got below here. Okay, it wouldn't be very hard to get below this. Okay, this would be a little bit more difficult, and if we did, then there's not much to stop us. And then if we get down, again, my people know, if we start getting down into here, man, this thing could just dump. Now, we don't want that, right, necessarily. I mean, if you're short, you do. If you're short on something, I'm not short or long on the market, so I don't care. And we have had a good move to the upside today, right? After this initial sell-off, we put in some structure right here, and then it's just been all uphill. Now, this is getting a little bit extended from the 20. Okay, we like to see things that move like this. 45-degree angle, 40, 45-degree angle. Okay, when you start getting much more than 45 degrees, when you start getting to 60 degrees or 75 or 90, you get the 90-degree move, which is basically straight up. Then you run the risk of what's called exhaustion. Whichever direction you're going, down or up, if you get those kind of moves, you're going to start getting real far away from the 20, and at some point you're going to reach an exhaustion point and they're going to want to pull back, right? Because whoever that was, in this case the buyers, okay, they're getting tired. That's why they call it exhaustion, right? They've been driving price up. Now it's time they want to take some profit. Well, when that happens, the sellers who want to drive it down, they try to just jump in like gangbusters and really drive it down. When they realize that buyers may be exhausted, they try to take advantage of it. I'm not saying that's what's happening here at all. I'm just saying that is, you can run the risk. We're getting a little bit extended from the 20. Okay, and what we're talking about is the distance from current price, to where the 20 is. See how here we were just kind of riding right along until right here. This is where we started moving away from it. Moving away from it, moving away from it. Now we're starting to come back a little bit. Okay, so maybe we just come back a little bit, let the 20 catch up, and then it goes higher. That's possible, right? Maybe we rest. Okay, this was a resting candle. Okay, maybe we just rest here and then try to go higher. And at some point, the 20 will start to curve up to catch back up with it. 20 simple moving average simply means it is the average price of the last 20 candles. Simple moving average. The 200 is the last 200 candles. That's why it is the slow indicator and this is your fast indicator. Some people like other indicators, the 10 and the 20, the 10 and the 50, the 20 and the 50, the 8 and the 21, the 14 and the 30. There's all different kinds of combinations that people like. Some people like exponential moving averages. Some people like weighted moving averages. I always prefer the simple moving averages, and I like the 20 and the 200. Okay, as we watch here, not much going on there. All right, so let's look at some of these other names. Okay, Apple. Okay, Apple had some strength today. Let me turn the after hours back off. Give me 1 second here. Just makes the charts cleaner for you guys to look at. And I don't keep them on during the day anyway. So here's Apple. Gapped up, pushed up, came back down right around the 20, pushed up again. This is just structure, and then back up. So this is a very nice day for Apple. I know a lot of people, I've seen people on social media, they're like, I wonder why Apple's so strong today. Let me see if it's got news. No, there's a whole bunch of stuff here. I'm trying to see. There's all kinds of things in here. Nothing that I see that would make it like really have a strong day. But they announced yesterday that they're no longer moving forward in the future. They're no longer going to use Intel for their chips, for their processors. And that really is going to cause a world of hurt for Intel, because obviously Apple's one of its biggest customers. They're going to start making their own chips. I can't remember. I want to say, okay, we're going higher again on the market. We'll go back over there in a second. I want to say 2021. I think it's pretty soon. I think it's like next year. They're planning on starting to use their own chips in their computers. So that's not good news for Intel, all right? But maybe some people look at that as good news for Apple, because maybe this move today is there's people thinking, well, Apple is taking steps to increase profitability, right? If they're making their own chips, that means they're keeping more of the pie. Maybe, okay? I used to work, I was an executive in the home improvement industry for years and years and years. I worked for one company where we made our own windows. So some people might say, well, if you make your own windows, that's awesome because you get to keep more of the profits. You got to pay for those facilities. Those facilities are worth tons and tons of money. I mean, just individual pieces of equipment, some of them were over $1 million. Just one piece of the equipment. Now imagine the entire factory full of that kind of stuff. And the company I was working for at the time, I mean, we had two factories. We had one that was like 500,000 square feet and another one that was like 200,000 square feet, two different places in the country. And you got to fill that with all that equipment. You got to have the labor force. You got to have insurance. You got to meet all the OSHA guidelines. There's a lot that is involved when you're manufacturing your own anything. So on the surface, people may say, well, Apple, they're doing this because now they're going to keep more of the pie. Well, but they're also going to incur more of the expense. One of the ways that computers and a lot of things in society are so cheap is because companies became smart and they only build the things that are the easiest, and then they outsource everything else, and they can get it at a cheaper price. Because if you're Intel, okay, I just want you to follow me on this. I'm on a MacBook Pro laptop right now. Okay, so I'm an Apple guy. I have an iPhone. My whole family has iPhones. And I'm not against Windows. And in fact, I'm debating the next computer I buy may be another Windows computer, because of a trading platform that I'm interested in trying out, and it's only made for Windows. That's besides the point. So back to computers and why they're so cheap. If Apple or Microsoft or whoever, Dell, whoever's using Intel chips, okay, if they can buy them from Intel instead of having to build their own facilities, get their own machines, hire their own people, pay their own insurance for all that kind of stuff. All right. And Intel is able to sell to Apple and to Dell and to Microsoft and to this company and to that company. It's better for everybody. That's what drives the price down. So I'm interested to see, is Apple eventually going to get into the chip market? It seems weird because they want everything exclusive. But I just don't know how they're going to be able to make their own chips in a cost affordable way if it's only for them. I don't know. Maybe they have an idea. So I digress a little bit there, but that may be one of the reasons Apple has been going up today. All right, so again, we just barely poked our head above. That alert went off. Okay, just barely poked our head above, and we've come back down. Now we've got a little over 15 minutes to go on this candle. If this candle would end like this, that would be a candle of indecision. Then we would have to wait and see on the next candle. Okay, do we poke up and then start to move down? Or do we start to sell away? Or do we go up strong and take the top of this out? When you have a candle of indecision, that's just what it means, right? Buyers and sellers, nobody took firm control. Now, and I'm not saying this is what's happening, I just want you to start thinking through scenarios like this. We've had this strong move up, okay, from all the way down here. If we start to see topping tails and smaller candles, and it looks like they're starting to round off like this, like that, the market could start to roll over, right? Now, we don't know that yet. It's too early to know, okay, but we got a smaller one here, but then we had a nice candle here. But then it rejected. Then this one popped up, and it rejected, and a little bit higher. Okay, but this candle's not a strong-looking candle right now. Okay, it's either going to be a doji or spinning top if it ended right now. Obviously, we got 15 minutes to go on this candle. But then let's say the next candle is, again, a smaller candle with a nice topping tail, and it's starting to work its way back down, and then the next candle, same thing. Then you can just almost draw it, and you can see that the market is starting to roll over. That's what they call it. On the bottom, they would call it a rounded bottom. Okay, you're putting in a bottom, but it's sort of a rounded bottom, and then you head up the other way. At the top, they call it rolling over. So this is something that I'll be looking for here as we get near the end of the day and into the after hours, the overnight session. Are we going to roll over here? Let's go to the 1 hour. Just want to go back a little bit here. Not too far. All right, so we haven't even got up here yet. And we also have a wick over here. This is just on the 1 hour. And okay, we could also, let me just put this, whoops, I gotta switch tools. Again, I'm not saying this is what's gonna happen, I'm just looking at scenarios. All right. Okay, you see how we came down here, caught support, went up to here, came back down, went up to here, came back down. Now we're working our way back up. If we continue up, all right, we might be able to get up into here. Right? See this trend line? We poked our head above, but we dropped back in, and you see down here. All right, but if we roll over, we could come all the way back down to this trend line somewhere. Or, I'm just giving you all these different scenarios. See how we've got some structure here? Maybe we just put in more structure and keep working our way up. But you see how, again, my folks know I'm always looking for these different things. I'm always looking for ranges. To me, that's one of the most important things you can identify. Are you in an expanding range, a contracting range, or a sideways range? consolidating range. And the reason that's important to know is because then you can also look for breakouts. You can look for breakouts. Let me show you right there. Okay, see this sideways range right here? And then what did we get? A breakout. Okay, we came out of a contracting range. Okay, right here was a contracting range. We came out of it. We didn't immediately drop. Then we went into a sideways or a consolidating range. Then we had a breakout down. So that's why it's important to know. This is what I'm always looking for. Okay, I'm looking for expanding or contracting ranges or sideways ranges. Okay, so right now it looks like we're sort of in a contracting range. See that? It's getting a little bit more narrow each time. Again, this is on the 1 hour. Let me get back out a little bit. Okay, see this? We dropped in, back up, back up, back down. We're heading up right now. Okay, so if we continued up, we may get back up here again. Then if it rejects, then we know, well, it's possible we're going to start moving back down to this side. Because that'll happen over and over until one side breaks and holds. Right? Now here, we broke above, or you could even do this. Let me do this. You can maybe even say it's here. Let me get that drawn in for you. Then I'll extend it. Extend it to the right. Extend it to the right. Okay. So that might be more the range right here. Down, back up, back down. We're heading back up now. Okay. Are we going to make it all the way there? We don't know that yet. Okay. I'm just showing you the kind of things I look for. All right, let's look at some other names. Let's see here. See if anything jumps out at me. Let's look at Beyond. Okay, here was Beyond's action today. Gapped up, shot straight up, and look where it stopped. Look where it stopped. Right here at a resistance level. Came back down, tried it again. Couldn't get through, came back down, basically been flat since then. Okay, support and resistance. I showed you guys earlier on a name where we didn't have any lines drawn in. This is why I draw them in. There's only 3 things that we know to be true in trading. And what I mean by true is nobody can dispute them. Okay, so 1, on price action. Candles can only do basically 3 things. There is a 4th, but it really ends up one of the first 3. So candles can go up, they can go down, or they can go inside. So here's an inside candle right here. Right? This candle went up. It went up. It took the top of this out. This candle went down. It took the bottom of this candle. Now there is a 4th thing, okay? And let me see if I can find one on here. If I can find it, I will show it to you. Right here. You can go outside. Okay, that means you took both sides of the previous candle out. So this is this candle's range. We took the top out and then came all the way back through and took the bottom out. That's called going outside. Now, when I say there's only 3 things, and this is technically a 4th, but you end up as one of the others, well, how did you end up? You ended up down, right? You could go outside and you could end up. All right, you see that? So price can go up, it can go down, it can be inside, or it could go outside, but you're going to end up or down. All right, so that's one thing that we know that can't be disputed. That's true, right? We can see it, and we know that those are the only, technically you say four things that can happen with price. Nothing else can happen. Nothing else can happen. So we know that that's true. The next thing we know to be true is support and resistance. Some people don't believe in support and resistance. They say, oh, it's a waste of time, and it's something that's already occurred, and absolutely. And that's how we know it's true, because it has already occurred. This already happened. What happened? We know that this level in the past has been respected as either support or resistance, or it has caused a reversal. We know that for a fact. It's true. That's why I like to have these levels on my charts. Doesn't mean you have to trade them. I get the question all the time in our room. Why don't we just trade level to level? Because price action overrides everything else. Okay, but it is important to know where price has turned, paused, or been respected in the past. Now, at some point, a level is no longer respected, and then we either remove it or we can adjust it. I do that about every 2 to 3 days, or sometimes there's times that there might be a name that I don't trade for weeks and weeks, and I'll come back and I'll go to adjust the levels, and I just have to make little tiny tweaks. Like little tiny tweaks. Weeks later, these same levels are being respected. Now, the most recent price action is what's most important. So we're on beyond. I'm not sure exactly when the last time is I adjusted beyond. So let's just do it. I'll show you what it looks like. So right now, I'm going to do an adjustment on beyond. So just like when we're drawing the new ones in, we go to current price. And right here's the first place we're going to draw one in. 109.34. Whoop. It would help if I got the tool. I need the price level tool. There we go. Okay, let's try it again. All right, so 109.34. Right there. Okay, that one's perfect. Okay, does this one still need to be here? Well, let's look. Let's go back. Let's go back. Okay, right here, I'm going to leave that in there. I'm going to leave that in there for now. Even though it came through it this time, all right, even though it came through it at this time, I'm going to leave it in there. I mean, price might come right back here and then go higher. Okay, let's look at this one. Should I leave this one in here? All right. Well, it's been respected a couple of times over here. Again, just because this is the first time that it went through. My rule of thumb is that if a level is completely ignored 3 or 4 times over a couple of days, then I eliminate it. Okay, but I don't do it immediately because a lot of times it'll come right back down to here and then it'll bounce. Okay, now this needs to be adjusted. I need to take it from here right over to here. So what is this one? It is 88.42. So I'll just type it in and it'll go right there. 88.42. Okay. See that? Now it's perfectly adjusted. We need one right here. 79.12. Change that. Okay. Then this one's fine. I don't mind these little ones here. I would probably put one right here. Let's see. 65.73. 65.73. Okay, this one's good. You see this one's been respected a bunch, and this one's good. That's where we're low. Okay, let's come up to the top. We should be good up here because we haven't been up here in a while. All right, so now I turn the candles back on. Go back to the 30-minute. And now my levels have been adjusted. So that's simple. Just do that. If it's a name that you trade a lot, about every 2 to 3 days, just go through and make sure that your levels are where they need to be. Sometimes, like you saw a couple of those, they're just little tweaks. Just little tweaks. But it keeps it accurate. All right, so that is the second thing that we know to be true. First is price action. Second thing is support and resistance, right? We know it's true because it's already happened. So the same reason that some people use for saying, well, I don't trade support and resistance because it happened in the past, the same reason they're saying they don't use it is why I use it. Because it did happen. It's true. We know that these levels are there for a reason because something happened there in the past. And then the third thing is supply and demand. Supply and demand, there's a lot of people that only trade supply and demand. That's when you're going to have like a rally base drop or a drop base rally, and price will leave a level, you know, okay, like here, you see how price left? Well, it's not just here, it's this gap. So it left here, okay, it left here in a very strong way. In fact, I might just draw this in to show you. Okay, so here we have a small rally, a base, and then we rallied away. So if we were going to draw this in, we would take a rectangle. Whoop, I didn't go to tools. There we go. Take a rectangle. Okay, so when we're drawing in demand, we start with the top of the first red candle, or if you've got a series of them, top of the bodies, down to the lowest wick. You're going to draw it across. So right there. Okay, and green for me is demand, pink is supply. And I could extend that all the way across. I'm not going to do it right now. All right, so we rallied, we based these two candles, and when you're drawing in supply and demand, 2 to 6 candles, 3 to 6 candles, that's ideal. You don't really want more than 6. Now you're sort of in a range. It's not necessarily basing. And can you have a 1 candle base? You can. I prefer 2 or more, 2 to 6. But you can have 1 candle. All right, so now what is this telling us and how do we know it's true? We know until price comes back in here, we know that buyers overwhelmed sellers. How do we know that? Because of how price left the level. Okay, a gap is the strongest way, right? Because it gapped clear from here to here. The second strongest thing is a big green candle or a series of big green candles. And then the third way would be several medium-sized solid green candles. Okay, each one loses a little bit of magnitude. You want to see big green candles like this and gaps, or in this case, we have a combination of the two. Because look at the rest of the size of the candles, right? Compared to this candle, look at the rest of the candles. You can see what average is. You can even see what bigger is compared to most of these. And then you see this big thing. And it's on top of a gap. All right, so we know this to be true, that buyers right here in this zone overwhelmed sellers. So the very first time that it comes back here, we would expect that there's still going to be buyers here that think that this is a value, they think this is a cheap price, and they will look to do the same thing because the reality of it is when price leaves a level like this, it's because there were so many unfulfilled orders there. And so price has to climb to fill orders. That's why price leaves this way. So again, trading is common sense. If there was a whole bunch of unfulfilled orders there, and that's why it made price go back up, the very first time we get back there, shouldn't there still be unfulfilled orders? There should be, right? Can you break through on the first try? You can. Yep, and there's ways to kind of, look when you get there to know, okay, are we likely to get a big bounce? Are we likely to get a small bounce? Or are we likely to maybe go through? There's ways to know that as well. All right, but this, again, we're talking about the three things that we know to be true. Price action, cannot dispute that price can only move in those certain ways. Support and resistance, you cannot dispute that these levels, okay, are important because they already occurred. Something happened there already, so that's true. And then supply and demand. When price leaves a level up or down in this fashion, we know that one side or the other overwhelmed the other side. We know that to be true, or this wouldn't have occurred. So those are the only things that I trade. Primarily, I'm a price action trader. And then secondarily, I trade support and resistance and supply and demand. All right? So trying to do a lot of teaching today. Sometimes on these live streams, we're just bouncing around from different name to different name. But I really wanted to do more teaching today, and we're sort of running out of time now. We got the last 26 minutes or so to go. Does anybody have any questions before I get off? Okay, because I don't have to necessarily jump off right now, but we try to keep it to right around an hour and 25 to an hour and 30 minutes. If we run long, sometimes we go an hour and 45 minutes, but I want to respect your time. I don't trade the last 30 minutes of the day. I don't advise the people in my room to trade the last 30 minutes of the day. The price gets really volatile. This is the end of the week as well. It's a Friday. And it's one of the most manipulated times of the day. And some of these live streams, we've seen it play out right before our very eyes, where price, one day on a live stream, we saw price drop $29 in 1 second. $29. We actually had the time and sales open. Okay, so it shows you up here, this is the last order that was fulfilled. Okay, 1,000, excuse me, what are we on right now? Beyond. 1,000 shares, 700 shares, and the price they were fulfilled at. And price went from whatever price it was here down 29 bucks. That, I've said this so many times. I just have a hard time believing there wasn't any orders from one to the other, right? So somebody, some institution, some big market player somehow manipulated to get priced it. And then another day we were on here in about I don't even know if it was 3 minutes. Price was clearly trending one direction, and with no news catalyst or anything, I mean, it was like $15 switch, like just like that, just like 60 to 120 seconds. So I always tell my traders, if it was me, and I rarely ever trade the last 30 minutes, especially the last 5 to 15 minutes. But I always advise them, especially if you're new and you're novice. I mean, because I'm experienced and I don't like to trade it. So I can only imagine what it would be like for somebody who's either new or inexperienced. Hey, Infamous, update on VXX. Can you explain why it's down only 5% when the VIX is down 12%? Infamous, I'm not going to be able to tell you that because I don't trade either one of them hardly at all. I will once in a while, let's look at the VIX first. I will once in a while trade the VIX. That's why you'll see I have some old levels on here. They have not been updated in a long time. Obviously, I know how the VIX works, but I don't normally trade it. Obviously, the VIX is showing volatility. If volatility decreases, the VIX should be a lower number, right? What is low? Okay, most people would say, $13 to $18, somewhere down in there. That's when volatility is just nice and calm. Once you start getting above 18 and 20 and then moving up there, volatility is on the rise. Once you get above 25 or 30 bucks, volatility is considered high. And if we go back, let's go to the 4 hour. You will see that we got all the way up to $85.47 on the VIX when volatility, okay, so as the market was going down, volatility goes up. Okay, now not always. That's where some people will get trapped. You can have volatility go up and the market go up. You can. But typically, the VIX and the direction of the market are inverse. Typically, not 100% of the time. But I can remember as the market was falling, people were saying, you know, we're going to get to 35, maybe 40 bucks. We went all the way to 85. That tells you how volatile it is, or it was. Okay. Then we started to fall. We got this little jump here. Then we've been falling, and now we sort of was kind of in a little range. Now it seems to be falling again. All right, so now let's go to VXX. I think you like to trade VXX. All right, and the only reason we even have these lines on here is because we did it for you the last time. So this is the 4 hour. Let me go back to the 30-minute. Okay. All right, so here we are. You can see the levels we drew in the other day have been nice and respected, and right now we're dropping. Really, I mean, there could be a little bit of support from this wick here, okay, when it gets down into here. It's possible, but if it gets past there, almost a certainty it's going to come all the way down here, 40.46. But to answer your question, I do not know why it's only down 5% when the VIX is down 12%. I don't know. I don't trade them enough to know if something abnormal is happening or if it's just they're not in sync with one another right now, like one's front running or the other one's lagging. I don't know. So I wish I could answer that question for you. But you can see here, obviously we had to spike, then drop, base, rally, and then now we're kind of coming down. Okay, so big spike up, then we dropped, we based, we dropped again, we based, we rallied, and then we've been dropping away. Let's look here. Now we're starting to get down into this wick if you look over here. So if, it's probably not going to happen today because we only got 19 minutes to go. If it can get below there, it's probably going to continue on right down to this level, down around the 40-46 area. So wish I could help you more with that, Infamous, but that's all I got for VXX today because I do not know why one's 5 and the other one's 12. All right, let's take one last look at the market and then we're going to wrap this up and you guys can watch the market close. And look, we're still climbing. So we might be going for the top of this channel. Okay, we might be trying to get up here. When we left before, we were down here and we are going, okay? Let's see. Would have to get over this. Okay, if it gets over this, then it is going to come up here, and then this would be the next area, and this is where, unless something happens, if it gets up here, we would expect to see it hit, maybe poke through, and then get some sort of pullback. All right, so we talked about it when it was down here, and it looks like we are trying to get up there. We still got, where are we at? 33, and this is clear up around 48, right? 48, 49, 50. Okay, so still got about 17, $15 to $17 to go to get up here, but it looks like it's trying, right? So look at the structure we had. Okay, higher high, higher low. higher high, higher low, higher high. Then we put in a lower low, and we sort of kind of ranged in here. You know, see this little spike up. Now we're going higher high again. Now we're going higher high again. So again, the trend for sure today, second half of the day, is to the upside. I shouldn't say second half of the day. This is from last night, but today trading session started at 6 p.m. yesterday. We've been moving up. Okay, whenever you see these, this is the structure. That's all it is. All right. Some people get confused. That's why you want to look at the bigger picture. Some people get confused, and they'll see something like this, and they'll go, "Oh, we're in a downtrend now. Okay, we're trending down." Okay, no, we're not. Look. If I just drew one line, I have a rectangle. Okay, I'm not even going to draw a channel or anything. If I just go, well, here's the lowest point. If I just go from here to here, okay, this is what a lot of traders that I know that don't use like trend lines and things like that, like this. They don't use them like this. They'll just take a straight line from the lowest point to where you're at now, and then they just look at it and go, yeah, we're trending up. I mean, is there anything simpler than that? You see that? Now, I don't do that myself. I mean, I'll occasionally do it. But if you really want to know the simplest way to know, okay, there's your lowest point on your screen. Here's current price. What's happening? We're going up. Until something dramatic happens, we're going up. What would be something dramatic? It's not just this. We have to then go lower low, lower high, lower low, lower high, so on and so forth. That is a change of trend. Okay, we don't have that right here. We don't have that. Yesterday, somebody was asking me about this, and I told them, in the short term, we are in a downtrend. Why? Lower low, lower high, lower low. Okay? In the short term, we were in a downtrend. Then right here, it changed, and now we're in an uptrend until it changes. Okay? All right. Let's see. Infamous. Yeah. If I knew, I would tell you, buddy. I'll always be honest with you. I'm not going to just make something up. I just don't trade those guys. I don't trade those enough to know why they're not together. So yeah, I'm always going to be honest with you. Folks, again, simpletradinglife.com. If this is your first time or you're new or you've been thinking about checking us out, we have a free chat room. We also have a premium room. Not expensive at all. The premium room's only $97 a month. We do a lot of in-depth stuff in there, but we do a lot of stuff in the free room as well. There are lessons. There are videos in both places. We have a Facebook page, Twitter. You could follow me on Twitter if you don't already. It's at Free Trading Help, at Free Trading Help. That is my Twitter handle. We also have an Instagram page. But I'd really like you to check us out in the room. So go to simpletradinglife.com and either click on the free chat room button or the premium button, either one. Come check us out, spend some time with us, and get to know us a little bit better. Everything we do is simple and basic. We don't try to talk over people's heads. We never put anybody down. Okay, we're all just regular, average, everyday people. I'm not here to try to put myself up on a pedestal. I know a lot of trading services and trading rooms, the people who run it, it's almost like they do it for self-gratification, I think. I could care less. And those that are in my room, if you knew them and chatted with them, they would tell you, right? It's not about me. It's about you guys. It's all about you guys. I'm here to try to help you become a consistently profitable trader. Whether you have $100 or you have $100,000 in your account, I can help you become consistently profitable by teaching you simple, basic things that are repeatable, they're easy to see, and they're easy to understand. So thank you so much for joining us. Remember, thumbs up, subscribe, and turn on that notifications bell, and then you'll get alerted every time we put up new content. We'll see you later. Have a great weekend.